It's my honor and pleasure to bring up a brother that I admire his work. Gene Demby's with NPR Code Switch. If you don't know, you better know. You better dial into NPR. But Gene Demby, please come up. And let this brother come up to some music, please. Yeah.
Mind over matter and soul before flesh. Angels hold the pen, keep a record in time, which is passing and running like a caravan trader. The world is overrun with the wealthy and the wicked, but God is sufficient in disposal of affairs. Gunmen and stockholders try to merit my fear, but God is sufficient over plans they prepared. Most deaths in the flesh when you act right here on this place called Earth on the Diamond Square. About to do it for y'all and y'all act.
How about the freestyle? Like what we don't do? Is this on? Hello? Hello? Okay. Thank you for having me. I was about to freestyle. I was about to get it in. We have a lot to get to. A lot of people want to have a lot of questions. So I'm going to go straight to Jonathan, who worked on this study with Andre. So first, what jumped out to you the most in what you found?
So I think if there's just one thing I want people to take away from this, it's that neighborhoods can be discriminated against just like people can. And there have been a lot of studies for years on labor market discrimination, other forms of discrimination, where the techniques involve things like sending out identical resumes, where the only variation between the resumes is that a name which is typically associated with a black person is listed on one versus a name that's typically associated with a white person is listed on the other, and the callback rates and the invitations to interviews are much lower for those with the black-sounding names. And so we're kind of taking a similar approach, but to neighborhoods. And I think that has a lot of implications. I mean, Andre just beautifully described all the things that flow from housing, and it opens so much in terms of opportunity. And it's been such a fraught market. It's never really operated as a market in the United States, and we're still at that point today.
In which cities and metro regions did you see the most pronounced disparities, and did they have anything in common?
Yes, so if you just look at absolute differences in home values across metropolitan areas, there are some just really staggering differences. So like in Bridgeport, in Connecticut, for example, homes in predominantly white neighborhoods are close to $800,000 in terms of median price versus just over $100,000 for homes in majority black neighborhoods. And there are similar differences in Charleston, South Carolina. Now, some of that has to do with the fact that, say, in Bridgeport, for example, there are a lot of rich hedge fund owners and other people in the financial sector who have mansions and so on. And so, you have to take that sort of thing into account, and we did. And we still find that there's still a very substantial difference in home values, even when you adjust for those kinds of things in those areas. And then when you look at those adjusted prices, you see areas like Rochester, New York, Buffalo, Detroit, Milwaukee. These were areas that were centers for economic opportunity during the middle of the 20th century that attracted hundreds of thousands of black migrants from the South seeking work in the factories and so on. And those are areas that are highly segregated today and that have very low rates of economic mobility for black children.
You just mentioned, Bridgeport having these hedge fund managers with big mansions. So how did you do apples to apples comparisons between black neighborhoods and white neighborhoods?
So the most direct way of we were able to adjust for quality differences in the homes themselves is by looking at the price per square foot. And these data are provided by Zillow for homes that are listed today. So that immediately deals with that issue. And then we were also able to consider the number of bedrooms, whether the home is an attached single-family home with presumably yard space and things like that versus a row house or a condo or part of a multifamily unit. And then going beyond kind of the structural aspects of the house itself, we looked at neighborhood qualities because obviously that's also a big driver of home value. So we looked at, I think most importantly, school quality differences, looking at the test scores of middle school students in the neighborhood. And then we also looked at things like access to restaurants and retail. We looked at access to jobs. We found that commuting times are longer in majority black neighborhoods, but on the other hand, access to public transportation is greater, and there are more walkable neighborhoods in majority black neighborhoods. And then we also, for a subset of cities where we could get data, but covering over 3,000 neighborhoods, we were able to get detailed crime statistics and took that into account as well. And in throwing all of these things into the model, we still found that there was very substantial devaluation of black homes. So none of those things, none of the things that real estate agents or buyers observe about a neighborhood and take into consideration when deciding whether they want to buy a home or not, none of those things explain the low prices in majority black neighborhoods.
We talked about this a little bit beforehand. Both you and Andre said that some of the most vocal pushback you got was to the very idea that you could compare white homes to black homes. Could you talk about that a little bit?
Well, I think it in the end, if you look at the valuation differences, it's as if majority black neighborhoods are assumed to have quadruple the crime rates that they actually have, or even lower test scores than they actually have. The only way to describe it is discrimination against the neighborhood that makes sense to me. It's really not, when it comes down to it, not an economic difference between the neighborhoods. It's really kind of a psychological hang-up that we as a country are still wrestling with coming out of Jim Crow.
So Elena, can you talk a little bit about how that devaluation happens at each stage of both the home buying process and also how it plays out when people are selling their homes?
So thank you, and thank you for this paper. And thinking about this from the broadest sense in the housing policy realm, real estate and housing is all about property and people. And this paper really has pointed out and really dug deep into the specific racial issues and racial bias that we see on the property side, and what that devaluation really means. And quantifying that is incredibly important. And I thank you guys for this work that you've done. This, this all ties directly back as we think about the housing market and as we think about black economics to wealth. And Andre talked about the wealth gap. This is a persistent gap that has been in our country forever. And when we look at black wealth, the majority of that wealth on the balance sheet of black families is their housing equity. And we are now at the lowest rate of homeownership in this country, at under 42% for blacks. Blacks are not seeing a recovery. 50 years ago, the homeownership rate for blacks was 42%. So there has been zero progress made in terms of building up and improving that. And there is a lot of systemic issues and structural issues that are legacies that are in our systems that were built. And I know we'll talk more and hear more about some of the historic bias and segregation and how we come to be at this point in the process and what we're seeing. I think what the Brookings paper does, what this devaluation conversation has done and puts kind of right in our laps is the realities of change in our housing markets. For policymakers on the housing side, there is an inherent conflict that has been discussed, but it has not been discussed in a racial context. And that conflict is housing affordability. How do we keep housing affordable? How do we create and sustain affordable housing? How do you rationalize and put together the conversation about homeowners who wish to grow their equity and value and home buyers who need to or want to buy properties at an affordable level? Where are those properties? Gentrification that's occurred over the last several years, how neighborhoods all of a sudden that didn't seem valuable have changes in racial and income dynamics and all of a sudden become very, very valuable. Who benefits from that and who loses? So I think there's just a whole host of things as we look at the systems surrounding the housing policy realm and the real estate process in every market, on both property and people side, that are put in our face here in terms of looking at the property devaluation, but also in terms of how people have been devalued and how the systems that support the real estate market, how real estate agents have behaved, how lenders have behaved, and sort of the systemic and racial biases that are in those processes are playing out. And all of those things are creating and causing not only what we see here on the property devaluation from this paper, but another huge element of devaluation that's happening on the wealth side of the balance sheets of Black families.
You just mentioned the efforts to sort of ameliorate and remedy the very low rates of homeownership among Black people, not taking into account race. So what do those efforts look like? If they're using other things by proxy, that's proxies for race, like what exactly is being done or has been done?
So it's a difficult question. We could do a whole seminar today on that. There have been numerous policies done. I'll point out one thing because it strikes me all the time. You know, there's a lot of big major policies that we've all heard of in this room, like the Community Reinvestment Act, and you know, large policies that have to do with community development and sort of ensuring that lenders are lending in low to moderate income and locations. Income is often the proxy. Race is something that people look at. We look at HMDA data. We look at all kinds of things to understand what's going on from a racial dimension. But when you think about policy explicitly, racial-based policy making is something that we need to be more explicit about in terms of how these actions and policies that are happening at federal and local levels specifically impacts certain populations, certain communities, home values, and the like. So I think it's a great question. There's a lot of opportunity, I think, in what we're seeing in some of the underwriting practices of lenders, looking at transforming maybe the way credit is evaluated, looking at the differences in credit scores between Black people and white people, and why are they different, and why is it inherently lower for Black people? I mean, there are a lot of things looking at alternative credit scores, how rent is a factor. I just mentioned that the homeownership rate in this country for Blacks is 42%. That means the majority of Black people rent. Yet rent is not factored when you're considering purchasing a home. It's not a factor in terms of your credit worthiness. So that's bias, and that's it's bias in a system, and it's a system that's been around for a long time. And as we look to progress and have more equity in our mortgage system, lending system, and housing finance system at large, I think those are places where we can look. The other thing I have to mention, because it's in the context of property, is our appraisal system, and the ways in which appraisers work, and now there's even conversations, and I won't get into it, but from a policy perspective, looking at automating valuations for a larger share of properties. The properties for up to $400,000 having automated valuations and the ability to waive, that is something that we need to think about, and how that impacts the values that are put on certain communities, and how are we building those valuation models. They're big black boxes. There's a lot to unpack there, and these are the kinds of policies that are broad-based and very, very important that we analyze to ensure that we don't have negative effects that further devalue property and the opportunity for communities of color.
Elena's talking about not baking in the existing biases into these new systems, right? So Jamie, you're a psychologist at Howard. Talk to us about implicit bias in the housing market and how that plays out.
Sure. So basically, implicit bias, we understand what racial bias is. That's just showing more positive evaluations towards, for example, a white person than a Black person. Implicit bias would be the kind of bias that someone might not be aware of themselves, and it might be something that they are not able to therefore control in any particular way. One of the things that folks, it's hard to wrap your mind around this, but we have very good evidence that this bias exists. Individuals actually categorize each other based on race within half a second of meeting each other, And what follows directly from that is the activation of all of the beliefs that go with that racial category. And that is what most people refer to as stereotypes. And so when we think about house valuations, one of the issues is, and we look closely at the data or the information about the content of the black stereotype in the American context, what we see is it's associated with aggressive behavior and crime. We see it's associated with lack of education. It's associated with poverty. When we think about neighborhoods, he talked about neighborhoods as sort of the object here of interest, or the question of interest. Invariably, what we see in the data, and this is what folks associate with black neighborhoods, is the term ghetto. And we can't talk about this without saying that word.
Sketchy is the word now.
Yeah,
Sketchy.
absolutely, absolutely. But when we, as a scientist, I have to talk about what the data show, and that's what it shows. And so, if that's what's coming into somebody's mind within, a half a second and following very quickly thereafter, then we understand that that's something that someone would have to overcome in order to be a fair player, whatever their role might be in the real estate business.
You mentioned before we were out here that that these biases introduce all sorts of rationality into what's supposedly like an economic marketplace, right? When people are being really reasonable, but it ends up meaning people make decisions that they might not otherwise make. So can you explain that a little bit?
Yeah, so there's a reason that the person sitting in the seat is not an economist. You have a psychologist when people start acting irrational outside of their own best interests.
No offense, Jonathan.
Yeah, no, it's fine.
Shade to
It's
you.
fine. So fundamentally, it's amazing to look at. I look at it because I recently bought a home, and I recently bought a home in a majority black neighborhood about 3 miles north of here. And I look at it myself, and I bought the best home for myself. And I tried as best I could to look at all of the sort of more objective indicators. Well, what's interesting is those are control variables in this model, right? So I looked, I can go on one of these online, Redfin, and I can look and I can see walkability scores, and I can see all of these sorts of things. I can see the schools, I can see crime rates, and so forth. And so if I stay focused on those objective indicators, it turns out that as a buyer, I can find $48,000 of value that I couldn't find elsewhere. If I had insisted on going in a neighborhood that was almost entirely white, I would have paid an enormous premium for that in DC, and I wouldn't be commuting 15 minutes to Howard, and I wouldn't have so many other wonderful things.
So all of you have sort of, like, directly or indirectly referenced Zillow and Redfin. How do sites like that more and more people are using to make home buying purchases, how do they affect what we're talking about here today?
I don't have any direct data. I'm a scientist, so I'm supposed to say that first. Okay, fair disclosure. But as anecdotally from my own experience, what you get is a deep dive on any given property before you go and look at it. And what's interesting when I thought about it for this panel is that racial information is sort of extracted from it. There's no racial information there in Redfin or Zillow. And so you could have a prospective home buyer that looks deeply at a property, including walkability, including commuting, including all that sort, and not thinking about race just for a little bit, just for a moment. And they might really like that house. And if you took race out of the equation, what you would find is you would be attracted to, if you're being rational, you would be attracted to majority black neighborhoods because you get more value. I don't want to say that technology is a panacea, of course. So, for example, I just heard from Alana, I was asking her about it, that in fact, Redfin and Zillow, they are reluctant, or they don't really want to post properties that are of lower value, below a certain value. Well, that means that those are, and of course, those are going to tend to be in majority black neighborhoods. So I think there are definite problems as well that technology introduces.
And I'll just add on they'll post the properties, they won't show the properties. So, so I think that's an important thing. So you can see. So, for example, homes priced at less than $100,000, you can find them. You can search them. You can go to Redfin, for example, and search and look, and see what those properties look like, where they are, walkability scores, all those wonderful things about the schools. But if you then want to go a step further and call that, usually there's a number to call. There's a disclosure. It's not a secret. Any one of you could go to that site right now and look at this. If that property is less than a certain amount in that particular market, they have a policy that we will not show this property, but you can reach out to somebody. Good luck finding whoever that somebody is to see if you can get that property shown to you.
What is that about?
I mean, that's just it's about real estate commissions, about the process in terms of how things work and what's I guess what's valuable to people. But there's also a whole host of issues that come with small dollar properties that I won't talk about here, but we have a whole paper on it that we did at the Urban Institute. Small dollar mortgage lending is a problem. So these lower cost markets that have attractive housing in it for people that are looking for affordability, you're good luck getting a loan. If you are not a cash investor or someone who can, or a speculator who can go in and buy that property up, getting a mortgage on a property under a certain value is a very, very difficult proposition. Another huge problem that I think that needs to be sort of talked about on the finance side of what we're talking about in lower value neighborhoods. So,
Jonathan, did you want to add to that?
Well, I think the detailed mechanisms Elena describing are really important to understand in terms of policy context and what could be done. Just as a casual user who's not an expert on the real estate market like Elena, my impression is that if people were looking for a nice, affordable home with a certain number of bedrooms for their family, people would gravitate to Anacostia in the Washington, D.C. area. I mean, there are a lot of great homes of high quality and that are massively underpriced relative to the rest of the Washington, D.C. area. And that's what jumps out if you go to one of these websites, from my perspective. And yet, as soon as people realize, but that's the majority black neighborhoods, we don't want to look there, then it doesn't get followed through. And I don't know if that's all on the buyer or if the real estate agents are also steering them away. But better understanding how that process unfolds would be valuable.
Yeah, and I wanted to also unpack a little bit. Some of you may be wondering where does this devaluation happen, really? I mean, after all, real estate transactions involve a huge number of people. I have no idea how many people were involved in, my own purchase of my own home. And so where does this issue lie? And I think it's important to point out that the actors at this point, we're sort of at this stage in the United States where we've moved away from it being acceptable to be overtly racist to openly express racist views. And so what we're shifting into now is what we, psychologists call sort of a more modern or aversive racist setting where players like to see themselves as fair, but in more subtle or ways, maybe nonverbal behaviors instead of verbal behaviors, so things they do instead of things they say, you're going to see this disparate treatment of black homeowners and potentially buyers and sellers. And so what I found really interesting, that's just the basic research on prejudice and discrimination in my field. What's really interesting is I start unpacking reports by the Urban Institute and this report and so forth, and you start to think about this, and what you see is that real estate agents will now, they don't slam the door right away. They will show one house to the black family, but they won't show the second one, or maybe they won't go the extra mile. Maybe the mortgage lender, they put out products, right? They are going to try and put together something, but they're not matching up the best rates and the best loans to fit. They're not putting that extra effort in. And I want to just connect this further to this implicit bias issue. Usually these implicit biases, we see them in sort of, like I said, nonverbal behaviors. So if you and I meet across the table in the bank to try and do a loan, and we just wouldn't experience that as warm an interaction. And if we don't have as warm an interaction, guess what? You don't get as good a service. And if you don't get as good a service, you don't get as good a loan and so forth. And so I want to bring it down to those one-on-one interactions, which I think are really important to real estate transactions.
It reminds me of that very famous Urban Institute Paris testing study from, I guess, like 3 or 4 years ago, in which they sent, in cities all across the country, they sent out thousands and thousands of people to ask for, to rent apartments or look at home prices. And everywhere they looked, Black people, Latino people, Asian American people, but Black people most significantly were shown fewer properties. And what was interesting was that the Black people who went out as the actors in the study consistently said that they thought they were being treated well, right? They said that the people were being nice to them. And it wasn't until someone came behind them who was white and asked to speak to the same, real estate agent, and that white person was shown a range of properties, they realized that they've been treated differently. So that was the thing about that was so depressing, was that that was happening to them in their faces, and they were completely oblivious to it. We're going to open this up to questions, but before we even do that, I want to ask one question. If we treat homes like a commodity, right? Like if we treat them as a thing that can appreciate and depreciate in value, aren't we starting from the position that there will be inequality in the market?
Sure, yeah. And, I'm now the scientist doing anecdotes, so this doesn't make any sense. But, my mom is here in the audience, so I have to say that. I thought about...
Where's she?
She's right here. Unpacking privilege and what, benefits and wonderful things that I have received and where I've arrived where I am now, and how we can spread those opportunities to everyone. And so what I realized is that I'm at least third generation, if not more, of folks that fully bought their homes. And also, we had conversations about wills and all these other things that help intergenerational wealth transfer. And so one of the things, I think of it from a standpoint of academic, and I think of it as I'm also a public servant in my community. How can we provide the knowledge and also a better service to our, minority consumers, so that we don't have what we have in my neighborhood, which is at this point extremely hot, market values going up 12% every year, and yet we have homes that are owned by folks who have passed away, and they are vacant, and they are losing value, and their family members are not able to enjoy that value. And I think it's a shame. And in my neighborhood, those are older African Americans who have passed away. And that's something that I think is just terrible, because their family members could really benefit from that. And so what we could do, I see that anecdotally, again, it's within 40 feet of my own house. This is something that I think would really benefit. I'm not sure, and I'll point to you all for the solutions.
Well, Elena
that's
has
the problem.
feelings about the importance of transferring wealth that way.
Yeah, absolutely. I mean, intergenerational wealth transfer is in the Black community in particular. What we've studied has been we study it with great concern because of the suppressed levels of homeownership rates for Blacks historically and today, because of the housing crisis and a tremendous amount of wealth stripped. I mean, we didn't talk about it specifically. Andre gave us the numbers on the property side, the $156 billion. Billions of dollars in Black home equity were lost through the Great Recession, through foreclosure and negative equity for those homeowners who had difficulty, being able to stay in their homes and had to let them go. So I think if the homeownership rate, just for example, were the same today as it was in the year 2000, we'd have about 770,000 more Black households. In 2017. That's over $150 billion of potential asset value. And during the Great Recession alone, just through foreclosure, I was looking at some of the old estimates. More than 240,000 homes were lost to foreclosure between 2007 and 2009, so in a 2-year period. Black home loss That's, an estimated $200+ billion in property value, whether property lost completely or lost equity, where families then had to walk away from those homes because they had a negative equity situation from the lending that they had on that property. That's not even in these numbers. I mean, so we're talking about an additional, hundreds of millions of dollars in lost wealth that could have been transferred among generations, and people who lost their homes who now cannot pass that wealth on to help the millennials that are now coming of age, that are ready to put a down payment on a house. They can't help them with that. There's so many effects of this wealth stripping that's gone on. And wealth has been stripped from the Black community in a number of different ways through history. This is probably the largest theft in terms of dollars. And then when you compound that with what we're seeing on the property side, and this devaluation conversation in Black neighborhoods, how do you grow equity? You start to hear people say, well, maybe homeownership's not a good thing for Black people because, they couldn't keep their homes, they're not worth as much, they can't maintain them, and that infuriates me to no end, but that is the wrong conversation. The conversation needs to be, how do we teach and educate people to know their value? Everyone who's looking to different neighborhoods, there's a ton of value in your neighborhood, and you're going to be so glad that you made the investment that you did. And then also for policymakers, rationalizing home values and home price appreciation for owners and that equity building with the need for affordable housing and the fact that communities of color tend to be where affordable housing is. And how do you preserve affordability? And that's the next conversation. And I think your paper really provokes us to start thinking about and talking about not only how do we make sure people are building equity that are owners and being able to sustain that home ownership, but also how do we ensure we can keep housing affordable so that other people can enjoy and get in, and that barrier can be broken. So it's a tough policy conversation, but a national housing policy conversation we need to have.
I'm going to open this up to questions. A lot of hands. Right here.
Talking about the stripping of valuations of the properties, have anybody looked at the analysis of how many foreclosures have been in that neighborhood? Because in majority neighborhoods, that's where you have a lot of lost value. So if you go to your valuation of the property and you look at Zillow, they'll devalue your property versus in a majority neighborhood, someone's going to call someone, a neighbor, and say, buy this house, as opposed to letting it go to foreclosure.
There have been a number of studies done to look at that issue. There's so much going on and I think that Jorge might talk about this in the next panel a little bit too. But when you look at sort of what happened with the foreclosed homes, the level of vacancy, which really depressed rates because those homes stayed vacant for a long time. A lot of those communities have now come back, but the people have left, and investors have purchased those properties. A lot of those properties have now become single-family rental, so those are not even available to people for home ownership because investors or owners of those properties are now renting them out for good rents, and rents have gone up, so that's been a good business for some. But what it does is it's taken a lot of that community's real estate, and Atlanta is a really kind of the center city for this phenomenon where lots of Black homeowners lost their homes during the foreclosure crisis. The homes plummeted in value. Those homes have now completely recovered and are now appreciating, but a lot of those homes are owned by investors who are renting them out to those same people that lost the homes in those communities. And so that is something that needs to be considered, and it is fundamentally at the core of some of the wealth stripping that came out of the values of these properties, is looking at how the real estate the foreclosure crisis really impacted these neighborhoods because of the and some of these neighborhoods were blighted by that phenomenon of people sort of having to leave those communities.
Can I just add one thing real quick on the foreclosures? There's been some great research by Jake Rue at BYU, who has looked at this issue and basically found evidence consistent with anecdotes that mortgage associations during the housing bubble, and that working in conjunction with big banks basically had really strong incentives to target majority black neighborhoods and try to get them into the highest risk possible loans that they could without disclosing all of the risks. And basically were paid commissions in order to get as many people to sign up for those mortgages as possible, knowing that they had very little probability of being able to pay them off, and then just offloaded the risk onto pension funds and the financial system where we know that happened. And so no surprise that there was a spike in foreclosures in majority black neighborhoods.
And another thing to just add to that, and I know we have to get to the next question, but predatory loans were a big factor leading up to the crisis, and black people were targeted, and Hispanic families were targeted in households with terrible products, which created just a snowball effect for them that made it very impossible for them to keep and hold on to those homes. I think it cannot be understated that the predatory practices and you asked me about kind of what's happened in the real estate market and policies. There has been a tremendous amount of work done on looking at specifically how those products and how the system operated to create some of that, but also how obviously consumer protection laws and Dodd-Frank and a lot of things that were put in place from a regulatory and policy perspective to try to protect and ensure that doesn't happen again. So again, and a lot of those products were given to people who had exactly the same credit criteria. They weren't bad credit, or there's a lot of misperceptions out there, and you talked about the narrative, Andre, which I appreciate, because the narrative about that needs to be more exposed, in that you had equally credit-worthy black families paying a lot more for not only in the house price, but paying more in rate and interest rate and a whole host of other things than a white family, which caused them to lose their homes as a result of that. And again, just the education and understanding of what you're worth and the value, and that you really can get a product just like you can get a product in a neighborhood and buy a house. That we just needed. That's a kind of educational thing, I think, that we need to make sure that we're continuing to elevate in this conversation about narrative.
Right here. Can you stand up and say where you're from, who you are, and where you're from?
My name is Dave Fian, and Andre, Pittsburgh. This is very personal to me because I bought a house in Perry Hilltop in 1980 and paid $25,000, renovated it, had a total of $50,000 into it, and sold it 10 years later for $50,000. So there was no appreciation at all. But the question I have for the panel and for you, Andre, is this. If you look at Pittsburgh, you've got Wilkinsburg and East Liberty. And I worked in East Liberty. I was the first director of East Liberty Development. East Liberty is a really booming commercial district now. And the home prices around there in predominantly African neighborhoods have gone up 50% in the last 10 years or so. In Wilkinsburg, with a kind of a blighted business district, there has been very little appreciation, if any. And my question to all of you is, how important is being adjacent to a successful business district? I know Detroit, we had a panel here a month or two ago, and the foundations are really talking about investing in commercial business districts in predominantly African and American neighborhoods as a way of bringing those neighborhoods back.
Andre, do you want to take that one?
No, I
Well,
Jonathan actually spent a lot of time in Pittsburgh as well.
yeah, I know the city. So the one thing I'd say, we do know that access to jobs is an important factor in determining value, and that showed up in our model, and not only in terms of commute times, but also proximity to retail. We also looked at proximity to sort of non-retail establishments, and in some cases that mattered as well. So, one thing I want to emphasize here is that the $156 billion number is after we've adjusted for everything that you could think of that determines value. The actual number If you just didn't adjust for that, is much, much higher, probably at least twice as much. And so the implication is that if you invest in majority black neighborhoods in terms of building businesses, retail establishments, improving the schools, lowering crime rate, doing any of the things that are in our model that predict value, you're going to raise the value of those homes and you're going to close that devaluation gap.
I agree. Short answer is yes. Not only the housing stock, but the economic vitality of that neighborhood. I mean, you mentioned Zillow's or Redfin's, whoever has the walkability score, and the think about the things that are factors that drive sort of what people want, why you want to buy in a neighborhood, and a lot of it has to do with what are the services and things that are around you, and that is a critical component. So yes, short answer is not only is this a real estate, where are the houses and the people, but what businesses can you attract? How can you attract more? How are the services of that community supported? The hospitals, the healthcare, all of those things I think are critical when we think about investment in those communities.
Yeah, and just a final point here is that psychology is everywhere, and so it's not just in home loans, but it's also in if you're business loans, you're going to see the same sorts of effects. And ultimately, it turns out that instead of going to the data and the real reasons why people should make these decisions, they're using they have their implicit biases. The stereotypes are there. The stereotypes are in your minds first, and you're not even aware that they're having an impact. And so this is the issue, I think, in part from a psychological standpoint, is what can you do, what can you build in, maybe at the institutional level, maybe at the individual level, to try to kind of circumvent or prevent that from having an impact.
More questions? Gentleman right there.
Good morning, Antoine Thompson, National Association of Real Estate Brokers. We're the oldest black real estate association in the country, and good to see you. Good to see you as well, Alana. Just a couple quick things and one question. First is that NARED puts out a State of Housing in Black America report. I would encourage Andre and the rest of your team. I like your report, and would love for you all to take a look at it, because we put out a report every year examining a lot of the issues that have been talked about today, and we have an effort to increase black homeownership nationally by 2 million people. I want to know from the panelists or Andre or some of the others, if you looked at a couple things. One, during the crisis, a lot of African Americans lost their homes. A lot of financial support went to people to save their homes. And I don't know if you all have looked at those programs that disproportionately help whites save their homes. And a lot of the African Americans had FHA loans. Most whites had conventional loans, and the bank bailouts disproportionately, based on some of our research, and you all could take a look at it to see if that isn't true the case, if you can shed some light on that. The other question is, we have an outdated system of providing access to credit today, and some of us believe that the way credit is offered today in terms of the pricing, the modeling that's done by some of the Fannie and Freddie, in addition to, if we also put in the context of how access to credit was in those neighborhoods in the 30s, right? Those red line maps and the values today. I don't think we can separate the current model, right, of how credit is accessed for African Americans in certain neighborhoods, and how the red line maps were in the 30s and 40s, and the values that we have today. I don't think they're inseparable. If you can shed some light on that, thank you.
I'll defer to Lena on the bailout and how that played out. But yeah, in terms of redlining, that's an area where I have done some research, and yeah, I absolutely agree with you that legacy is very much still with us. And redlining was only one of the mechanisms that both government actors as well as private actors put in place to either keep black people out of white neighborhoods or to devalue black neighborhoods. And some of the other ones where there used to be zoning laws that explicitly forbid black people from living in white neighborhoods. Those was in Louisville, for example, and some other cities in the South that were eventually struck down by the Supreme Court. But now we still have very much zoning laws that are class-based, and so low-income, even middle-class home buyers are kept out of certain jurisdictions because real estate developers are not allowed to build housing that would be row housing or would be multifamily housing. And so that's still very much alive. And then and you see correlations between the places that had the redlining and that converted, then moved to other forms of discrimination like modern day zoning, and before that it was deed restrictions that explicitly forbid a white prospective buyer from buying a home, and those deed restrictions were not struck down in the 1950s, and there were still issues of enforcement after that. So I absolutely agree with you.
Black and Hispanic families were disproportionately foreclosed on when we look at that, and the data is out there everywhere to support sort of how much more what the magnitude of that was. We have not. I don't have data. I'm sure maybe someone does. Unpacked the investments and the dollars that were spent in terms of trying to save homes, and there's billions of dollars that were spent by financial institutions to try to remedy and keep people in their homes. I haven't seen a study that is able to quantify that, and I think the data for that would be very difficult to come by to understand exactly who got support and who was able to stay in their home versus those, and being able to break that down by racial guidelines. I'm sure it could be done by geography, though, and there probably could be some interesting parallels established there.
I just a couple of comments real quick. The first one is to point out that redlining, which is the practice of not offering loans in primarily black neighborhoods, just institutions just not offering loans, that's something. There was, a settlement agreement as recently as 2014. So this is actually something that is still with us, is still a legacy that's around in Memphis, Tennessee, in that particular case. The other thing I just want to say, sort of last comment from the psychology side, is the complexity and the opaqueness of this market more than any other market is, I think, what makes it really challenging to try to, and I think these folks are doing great work, and Andre's doing great work on trying to unpack all of the players and all of the ways that these things operate. And as soon as you are in a situation where there's this sort of modern type of racism where on the surface the verbal things that are said, at least in public, at least between clients and their servicers, sound very positive and they're good, it's very hard to kind of pinpoint exactly where these issues are, but I would just encourage folks to realize that every single one of the people that you touch as you buy a home or you sell a home, that's an opportunity for these sorts of biases to come in and sort of trying to shine a light. Maybe in some cases, can we take all the information that has to do with race out of an application? At what point could we do that? Like those sorts of things is something that we're going to be grappling with for a long time because of the nature of this specific and very important type of transaction.
Thank you so much, all three of you. Jamie, Elena, and Jonathan. We're going to bring on our next panel. Thank you so much for doing this. We appreciate you.
Thanks for watching. Be sure to like and subscribe for more videos from Brookings.